Hi everyone, this is Paul Lange from DTS. I want to introduce you to what you're about to watch. This ended up being an hour long, although it was advertised as 30 to 45 minutes. It was an event that was presented live to free members at Discipline Training Strategies. This is simply called Coffee at DTS. I do these once in a while, sometimes called Coffee with Paul. I haven't done one in a while. Fun doing them. They're Saturday morning, quick little one-hit thing at 9 o'clock in the morning. I typically open the floor up to questions a lot, but I bring a couple of topics, and I pre-announced in an email that I was going to have a lot of topics because as I began preparing for the event, all these things popped in my head like it does sometimes. So I gave a bunch of stories. These are all educational topics. You can read the list there. That's what I run through. It takes about an hour. So I hope you enjoyed this little informal talk. And if you like events like this, come check out the other educational events, articles, and Trading Week videos you can get access to on the DTS Free Stuff page. For now, sit back and enjoy this event. Good morning, everybody. How is everyone doing this Saturday morning? Welcome to today. This is Saturday morning coffee at DTS, also called Coffee at DTS, also called Coffee with Paul. It's had different names over time. I haven't done this in a long time. I never did this a lot. This is just kind of a, once in a while. Maybe every 2-3 months I did it, but I haven't done it in like a year. It's been a long time. No particular reason. I just don't know why. I always liked these. I thought they were fun events. Everybody enjoyed them. So we're going to do just what the email said. But the little follow-up email you saw said that as I tried to get a couple little topics together, they just poured out of me so fast that I probably have a 2-hour event if I wanted to do it, but I'm going to try and keep it like 30, 35 minutes and leave time for any questions. So I'm going to go over exactly what we're going to cover today. I think it's going to be a great little summary of stuff. I am recording this. I will post this. I had too many people saying they're playing golf this morning. Sorry. So it's going to be trying to be a little fun, a couple stories, but all of it with the eventual pursuit of helping to educate or help make anyone listening a better trader. A lot of times, matter of fact, I say most of the time, a lot of times, whether people realize it or not, but I get a lot of comments that somebody changed their career because of the smallest little trigger. Anybody had that? Like, just give me a one. Like, certainly you did a lot of work, you did this, you did that, but something just flipped the switch for you that you heard, that you saw, that you realized, that you tracked, that you reviewed. Anybody say that would be the case for them? Like you really, well, a lot of you probably aren't trading that much or whatever, but it's a very common thing for people that kind of reach it and they say, boy, there's just this one little thing happened. And that's what a lot of these are. They're little tidbits that maybe if you're learning or you're almost there, just kind of push you over the edge. Yeah, right. Just a few words. Let's take a look at what we're going to do today. The scanner guy. It's a little story, but it exemplifies a point that I've been trying to make and have been making, and I just want to kind of drive that nail home again. This next one's kind of a fun one. This invite open a Pandora's box. Just kind of a funny little thing we'll do. This invite open a Pandora's box. Fun little thing. We'll go over that real quickly. Flipping a coin with the AC running. You'll have to wait for that one. Why have the DTS podcasts been huge? One reason. It wasn't your style on your trading room trial. My newest teaching push, the last one was psych. Upcoming seminar emails and DTS updates. Let's begin. And before I begin, as we begin, anyone have any questions they want to just throw out there to start? The email says we're going to first take care of any questions you have about anything in the world. And we'll do it throughout the whole thing if you have them, so you don't have to do it right now. I don't see anybody typing, so I'm going to begin because I kind of overloaded today. Part of the issue kind of was that I had decided to do this and schedule it on Wednesday, and then we had the Thursday market that I wanted to address a little bit. In your technology video, your computer screens seem rather small. If you ever thought about getting larger ones, wouldn't it be? My screens are 23 inches, Gary, and I have 4 of them. And to me, they're very easy on my eyes. I think it just depends on your desk and your layout. I have a very, very wide desk that can actually take 5 monitors across. And I have 2 computers, so one half my desk, I have two monitors for personal stuff. And then on the left side, I have 4 monitors for trading. They kind of overlap in one spot. So I like those a lot. If I were to get new monitors, I'd probably do the same thing. It doesn't matter. I think it's just the resolution. I'm not an expert at this, but I think it's just the resolution because if you have a smaller monitor, you can always make things bigger, Yeah, I'd maybe switch to that if I were going to. But no, I'm very happy with what I have. You can adjust things so they're the right size for you no matter what size monitor you have, right? It's just the more screen space you have, the more ability you have to show more stuff. So the bigger the area, the better. Yes. How you split it up, I'm not sure it makes a lot of difference. But yeah, thanks. Anything else? If I were to switch, I think I would only switch if I were to change office, move, have a different layout, that type of thing. How many thumbnails do I have? Well, I have actually on my day trading screen, which is where you would have thumbnails, the only spot. I have two whole monitors dedicated to thumbnails, so it's about 60. I don't usually have them all filled up. I usually have about 30 filled up when I'm during the trading day. And actually, if you want, if you've been in the room or if you're in the room or if you want, I have a snapshot on my screen that I'll send you if you want. It's not completely up to date, but it's close enough just to give you an idea how I have things laid out. But I don't think it's really an important thing. That's a personal question for most people, how they want to do stuff. Most people would be scared if they saw my particular layout. Anything else before we get going? Oh, a little weird tip. Things change so much. Throughout my life, you always, buy quality, you get what you pay for type of thing. The monitors before this set of monitors, I got Samsung monitors because they're the best, right? You know what? Samsung are crap. Every Samsung monitor just burned out on me in 2 years. Terrible. So I said, you know what? If they're going to burn out anyhow, let me get some cheap crap. I got Acer monitors, best things I've ever had. Flawless, perfect, great resolution. I've had these for a long time now. So hard to say, where you get your money these days. The old names that are known for quality, sometimes the new guys haven't beat. Just a comment from me that has nothing to do with trading, but I would get these same monitors again. And I've had other people say that. I mentioned this once a long time ago, and somebody said the same thing. Samsung monitors are garbage. It was funny too, because there were four of them. They just all four went out in about 3 months. They just fizzled out, just right down to nothing. So they were like predestined to do that. Let's get going. Let's begin. The scanner guy. So I'm on LinkedIn because I have to be. It's a pain in the neck. I don't do anything on LinkedIn. I don't do anything on LinkedIn, and I just get people bugging me, selling me crap all the time. It's just a pain. But I had this guy, and every once in a while I get people in the financial industry all the time, and I don't want to do anything with anybody ever. But I had this one guy that was more of he said he was a trader educator like me, and he wanted to get together. He wanted us to pair up. And his big thing was he wasn't really any kind of trader educator. He was more of a software person. But he had a software program that was making money like crazy. Have you ever heard this before, anybody? But of course, this wasn't an ad on my email. This is a guy contacting me, messaging me through LinkedIn saying, hey, saw your site, we got to get together. Looks like you really know what you're doing, and I've got this thing we should get together, and blah, 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 blah. So I get back to him, I said, hey, you know what? What do you think I said? Anyone want to take a guess? It's Saturday morning coffee, so I'm going to have some coffee. Anyone want to take a guess what I said to him? It's a personal conversation, so I kept it polite, but. Yeah, I just said, hey, you know what? You're really talking to the wrong person because I've been doing this a long time. I spend every day finding better ways to make things better. And you know what? I've never seen any software program that's ever going to make money. And you're just talking to the wrong person to see it. So he gets back to me and goes, no, mine's making money. But so we go back and forth a couple times. I said, fine. Real simple. Send me one of your scans or just send me a snapshot or send me the proof. Send me what it is. I don't want to see. I said, I don't want to see a trade that you look backwards and your scanner found it. I want to see a scan and every trader recommended and how those results were, right? So then he comes back to me. I mean, again, this is one of these don't be drinking coffee because you're going to spit it up. He goes, well, actually, we send out the software blank and we let our customers program in what they want to do. But I know a lot of people are making money with it. So again, it just goes to show this whole thing. I just want to emphasize again, if you ever find something you think makes money, let me know. But what people always do is, and whenever I talk to somebody about this, it's the same thing. Either they have something that is just a scanner that, produces a list of 20 or 30 stocks that are extended or consolidating. Okay, I use that too. That's not making money from software. That's just getting a watch list. You'll never make money just looking at a watch list. The whole key comes in, okay, you have these 20 stocks. What do you do with them? and how do you enter, and how do you manage the entry, and how do you manage the trade, and how do you manage the stop, and is that of the 20 selections, which are the ones that really make sense? Until I see that, it doesn't exist. I'll just continue to say it. There is no scanner, no software program that just makes you money. Sure, there's things that aid you. And the other thing I get is somebody that shows me, here's 3 trades that the software found, the reverse engineering thing. Okay, fine. There's 3 winning trades. Great. Here's 3 winning trades I have also. I went long when I saw my neighbor's car back out of the driveway. And you know what? 3 times in a row it worked. But show me exactly what your trigger is, what the program is, and show me every trade it produced, and now show me if you're making more than 6% a year. So, no, not effectively, Gary, not any better than you could. I mean, here's the thing, Gary. Well, let me answer it this way. Yes, there is. You know what? And you don't need to buy software for it. All you need to do is pick any one of a dozen methods I could give you and walk away and let us do his job. But the problem with management 90% of the time is you get in the way of your own trade. Correct, everybody? Now, if you're clueless how to manage, right, then you can't manage. But if you pick good trades, and they're generally winning trades, and you have a management process, most of the time you're screw up. So, yeah, you could have a software program that says, hey, just follow the rising 20. You know what? You'd probably make more money than what you're doing now. But there's nothing that's going to outdo what just a little bit of common sense and training will do for you. Well, if it's a discipline thing, I don't think the right thing is to take an inferior product and follow it blindly, but rather to learn what to do and then gain the discipline. Most discipline comes from not having confidence. And start off by just walking away. I'm going to show you at the end today, I'm going to show you how I screwed up the last 2 days a little bit because it's exactly one of the things I teach not to do. And I have my reason for it. It's not a good reason, but I'm going to show it to you because I got into the same issue that I'm explaining to you. I don't normally do that, but I did. All right. So there's the customers of this scanner guy trying to find something that works. If there's anything like that, why wouldn't I use it? I just keep saying that over and over again. And I have ever since DTS opened, pretty much saying, there is nothing. Prove me wrong. Period. Next one. Fun one, Pandora's box. By the way, I don't think anybody knows what Pandora's box looks like. I'm not even sure I know the story to Pandora's box. Actually, when I Google it for a picture, there were 75 different boxes. Nobody knows what Pandora's box actually looks like, or if they do, they're keeping it a secret. So I sent out that email, and guess what my main response to the email was? Not huge, 3-4 people. You know what they wanted to know? They want to know what their main response was to the first email they got? They were like, wow, where can I get one of those coffee mugs? They like the coffee mug. So it's not a real coffee mug, and I don't think I'm ever going to do this. Because the first thing that's going to happen is I owe probably 3 dozen people T-shirts, and I said you're getting T-shirts as soon as they come off the press, and I'm never going to get them off the press. So, yeah, new side hustle. But if I were to do this, and just out of my curiosity, 1, 2, 3, 4, 5, which is your favorite? Now, these 2 are black. One has my name, one doesn't. These 2 are clear. So there's really 2 mugs, either clear or black. And then with name without the name, it's a more ovally shape. What would be your favorite? What would be your favorite? And I'm taking notes. Anybody that picks the one without my name, I'm making a special category for you. Oh, great. We're all over the map. Come on, more consensus here. 3, 3, 3. Oh, 3 is a popular one. Okay. I say I would have gone with with the oval one without my name. More 3s and 4s. Oh, okay, all right. Kimberly, if you're really female, then your vote counts twice because you have taste. I would have gone with 2 myself, Kimberly, to be honest with you. Wow, a lot of 3s. Okay, well we do have a winner. Yeah, make them all. All right. Well, thank you, Gary. Thank you very much. All right. All right, interesting. Now, I'm not doing this, but just in case I were to, because if I do this, the first thing I do is I'll have to give out free to about 3 dozen people. So anyways, yeah, I don't know how it came. I don't know why they came out with coffee and one didn't. I don't know. Just the way it is. Confusing. No, yeah, very few people picked one. All right. Got it. Thanks. Here we go. I'm going to confuse you now. As a matter of fact, if you haven't had some Kahlua in your coffee, you're going to get confused here. Flip a coin. You ready? You flip a coin, it comes up heads. You notice you notice that the AC was off. Okay, flip a coin as heads, AC was off. You flip it again, it comes up tails. But you notice when it came up tails, the AC had turned on. Now, you probably don't have a little unit like that hanging, but you get the idea, right? So came up heads with the AC off, came up tails with the AC on. Conclusion, the AC affected the toss. In the future, there are greater odds of tails when the AC is on. You can bet on it. Any future events where that does not work, you simply ignore them or create a reason why that one flip didn't work, like the door was open or the window was open. Make sense, everybody? This is a form of reverse engineering or correlation versus causation or the movie number 23. Huh? What are you talking about? Well, hold that thought for a moment. We'll come back to it. Let's go on to something that you have more interest in. I'm going to sit here for 5 minutes on this slide. And this is where I kind of added slides where we're going to be a little over because when I first scheduled this, we didn't have Thursday. Why did this happen Thursday? That is the biggest red bar on the chart that I can see looking back as far as you want to go. I think the news was looking at the SPY and it wasn't quite as big, but that's the biggest QQQ bar. That's the QQQ. Why did that happen Thursday? Come on, all you expert traders, explain to me why that happened. You can. I mean, if you want to, I encourage you to Google it. Some news came out, and the moon did something. Panicking out of the stock market. Many other correlations. Because I went long near the bottom, the market was out to get me. This is just such a perfect example. It's the reason I put it in here. It's something I talk about all the time. As a matter of fact, in the intro class, chaos theory, yeah, okay. Supply overwhelmed demand. There you go, Joe. Yeah, that's right. In the intro class, I do a whole little section on this where the bottom line to it, since I have to bottom line this very quickly, is the market is 100% supply and demand. That's what it is, period. If there's money that wants to come in, it's going to come in heavily on good news and come in somewhat on bad news. And, good news, bad news is all a relative thing. Right now, nobody could tell you what good news is because what's good news for the economy, the market interprets as bad news because good economic news means maybe more robust economy and we're not going to lower rates. So we have this stupid paradox going on where the market hopes for bad news in a sense, which of course makes no sense at all. But the whole point of it is what's good, what bad, none of it matters. And news does not affect the market at all. Only exception is shock value news. Shock value is something that is just completely unknown to the market, not contemplated, not discussed. And in my career, as far as the market goes, there's only been 2 times of shock value, and that was COVID and that was 9/11. Those are off the chart things that nobody ever anticipated. As far as individual stocks, you get shock value all the time because, individual stocks have things happen to them. The CEO just got caught in the closet with the secretary. We lost all this money. Oh boy, our earnings weren't up 40%, they were down 90%. So you get shock value all the time. And but even then, you don't look to the news to make any decisions. I don't care what the news was, it's simply irrelevant. What matters is when the news creates a chart pattern that indicates that there will be selling. And the same thing happens all the time in the market. And I encourage you to Google why that happened. And the reason I love this so much on this particular day is because that was fantastically good news. That gap up that day was all NVIDIA earnings. Blew them out of the water. I didn't read it. I mean, just listening to a comment. Blew them out of the water. We gapped up. We're going higher. Nobody could possibly think anything else besides that based on news or information. But yet, what happened, we put in the biggest red bar in the entire day. So what happened on that gap up? What behind the scenes, I know they're selling, you're not going to get this answer. But what happened was, I'm going to talk about this through here, but through here, through here, through here, through here, through here, through here, all of a sudden, everyone looks at the chart and says, you know what, all of a sudden we're down X percent and we're actually in a daily downtrend, right? And you're sitting down here going, crap, what am I going to do? And what happened was very simply, that gap up was an excuse to sell and take the profits that were not gotten in here. And obviously, not just you and me, but the big boys too. Obviously, all big boys, because that's a lot of huge selling going on. Why did it happen? The major earnings victory propelled shares higher. There's so many titles, I looked this up, there's so many titles that say, why did the market drop? And not one of them answers why the market dropped. It all says why it gapped up. And Google this yourself. Here's the funniest one I've ever seen, written by nothing but pure idiots. The volatility index jumped. Trading ranges wide, evidence uncertainty. So they're saying the market dropped because the volatility index went up. Is that a true comment, everybody? Do you have any idea what the VIX is, the volatility? Yeah. Yeah, exactly. Exactly. The volatility index spiked because the market dropped. See, what do you learn when the market drops and the volatility index spikes? What do you learn from that? If I take this book off my desk and I hold it away from my desk and I let go and it hits the floor, what did I learn? You learn absolutely nothing. Yeah, you learn nothing. That's exactly what's supposed to happen. It's just an inverse relationship, right? If I take a book and hold it out and drop it on the floor and it hits the floor, I don't go running around the house saying, oh my gosh, the book hit the floor, right? But what if I drop the book and it stops halfway down, right? That would be amazing. And that's what the VIX, what people don't even get is, what you really want to see is if the market drops and the VIX doesn't spike, that becomes a great indication that you will be heading lower. That's really the best use of the VIX or whatever volatility index you want to look at. So there's, stupid comments all over the place. And here's, again, a funny one. And there's a point to doing this, and I hope many of you, I apologize, because this is just preaching to the choir, and you're way beyond this. But I know that the majority, there's a group that kind of say, yeah, Paul, you said this, I understand, but you don't understand. And you continue to read news and look at news and think that's how you make money. Here's the title: Why NVIDIA's big earnings report couldn't revive the stock market rally after all. And guess what? You can read the article, Business Insider. That's Yahoo, I think, right? But just Google that title, you'll find it. And guess what? It went on to not offer a single reason why NVIDIA's didn't revive the market. The culprit of the reversal, blah, blah, blah. And all it goes on to say is just what we already know. The market dropped, and that's it. And the funny part is, again, that the market reacted to positive news. Back up a minute. Let's say the exact same scenario happened, but and maybe the market opened flat. But what if NVIDIA had bad news? What if their earnings were bad? What would have been, then all the pundits would have a field day, right? All we'd be hearing is that, oh, NVIDIA, the leader of the market, the leader of AI, they didn't have earnings, this is bad, and the market obviously reacted to that bad news, et cetera, et cetera, et cetera. And then that's when you start to think, oh yeah, boy, this news stuff matters. One company has bad earnings, that's the end of the stock. But here, it happened on good news. There's absolutely, positively no reason. And my point simply is, you should never, ever, ever be looking at the news, because it not only is a waste of time, but it hinders you in the proper analysis of what's going on. As a human being, like I always say, read news. That's fine. I have no problem reading news as a human being. But as a trader, if you think you're going to learn something, all this would have done would have be to embed in you the fact that you need to get long because NVIDIA had great earnings. So in my mind, the stupid little AC coin toss thing is exactly this, meaning having to do with news. You hear the pundits say, oh, gee, the employment index, blah, 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 is terrible, and the market drops that day. And you say, oh, I better start to understand the employment costs, blah, 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 because that really affects the market. And the next day, oh, one of the Fed people said we may not raise rates. Oh, they're not raising rates, or they're not lowering rates, and the market dropped. I better study that. But yet, if you look over a series of 100 comments, there's no correlated reaction to news at all. The market does what it wants to do, and then at the end of the day, the pundits say, here's why it did it. And in some cases, they can't even say why it did it. There's just no reason. The reason was the chart pattern. So basically, nobody could possibly have seen this coming, right? No one could have seen this coming. Daily market letter on this day right here. Talked about the situation. Here's the key comment. First of all, this is the very first time that we've seen a gap down red bar in about 3 months. Never before was there follow through to a gap down. So this is one of the things that you look at. When I talk about understanding the language of charts and reading things and just seeing the little telltale signs and how they add up. Now, this doesn't mean necessarily this day, this is the end of the market. It turned out it was. This was the end of this rally totally on that particular day. Every single time before this, and you hear people look at charts and they don't understand. You hear, that this is very bearish. Well, it wasn't bearish because it was a one-day thing, and the reaction was to ignore it. And what you look at is follow through. In other words, it's not what happens that day; it's the reaction. What happens? The reaction to this red bar was to buy it. And for 3 months, there was not a single time, check the chart, that we had a red bar or a gap down that had followed through. Every gap down was bought. There was never any bearish follow through. This is the first time that we gapped down that day right there, and we stayed weak and refused to come back and fill that gap. So that's a big clue. Now, it doesn't mean after a 14-year bull market, you suddenly, pull out all the stops and say we're done, but you continue to evaluate things. Number two, and again, these are comments out of the daily market letter. These are not after the fact hindsight teaching. And obviously in the long term, I was switching to short throughout here. I did a terrible job of it, but I was switching to short throughout there. Number two, the area on 3 is critical today for the bulls at the moment. And then here's the acknowledgement. At the moment, we're in an hourly downtrend and have questionably broken some daily support, which means the bias is bearish until proven wrong. Number 3, on the NVIDIA gap up day, I'll be favoring shorting this morning with any appropriate setup. So no, wasn't bullish that day. Why? Because it's exactly what I explained. This pattern is going to generate the need to sell on any bullish moves or gap ups. That's what downtrends are. Things rally back, and then the big selling comes in again. So yeah, this isn't unpredictable. And by the way, I'm not going to sit here and lament too much on this because this is the most difficult charts I've ever seen since I've been trading. We're just in complete nutsy-ville. But the more it gets nuts, the more and more it's going to get better because as the volatility, you do run out of buyers at some point, and as things settle down, it's going to be cleaner patterns. We've been seeing the beginning of a clean pattern right now. This in here is getting very clean right now. And actually, to be honest with you, I was very happy we did not free fall yesterday, because if we would have gapped down and done this, long term, it's whatever you got. And then if you're long positions, long term, and you hadn't sold at the end of this day, what do you start saying to yourself? Somebody give me the common things. I'm saying for somebody, some of you may never sell some of your long stuff, that's fine, but I'm saying if you have a lot of long positions and your goal was to take profits at the market top, and then you put in these 2 huge red bars, yeah, what else would you say? And now you're stuck, and maybe they're even underwater. Because look at it, if we ended up down here, it would be underneath 2 months of trading, right? Too late to get out now. Certainly it's going to come back. I'm down too much money to sell now. Yeah, mommy. Right, I'm going to feel like an idiot when it does come back. It always came back before. Oh, listen to the lady on the news. She just said that this is a buyable pullback, right? And then you're down 50% of your count, and you're just sitting there like a deer in the headlights. So you have to have a plan. You have to be able to react and understand what you're doing. All right, next topic. And this is going to be, to make this point, I have to do a little brag. So I don't want you to get the point that I'm just bragging. But I started doing podcasts a couple of years ago, and they have been very popular. And I would say very popular. I don't mean they get a lot of hits like big people do that advertise. I get like zero in hits. I get hits, but I mean, I don't get tons of listens or downloads. I'm not in the tens of thousands and maybe in the hundreds, but what I mean is that they're very effective is that people really like my podcasts. And it used to be, well, I probably have more people come to DTS from the podcast than from anything else. And there's one thing that everyone says, and I don't even ask for it. I may say, well, how's your DTS when they email me or call or whatever it is, and say, oh yeah, I started listening to your podcast, and without me asking, they say, I started listening to your podcast, and what do they say? Yes, Tony, exactly. I, I came for the humor. Actually, I don't tell any jokes in the podcast, really. I actually wrote down some of the comments. Yeah, pretty much, Eric, and that's what I'm really proud of. He said, basically, you really appealed to me. You said things that made total sense to me for the first time, and there are things that I had thought about but never heard anywhere. And that's what I get a lot of. I seem to get, not a lot of people hear me because I'm just a little guy, but the people that hear me seem to really like what I have to say. So just thought I would throw that out there. I like that. Just not my style. And I just want to throw this out there for those that it applies to. This is probably a fairly small amount of people. Sometimes I get somebody come to the trading room and, they have a trial and at the end of the week they say, it was great, blah, 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 just not my style. Now, there's two ways I could take it. Number one, it is not some people's style. I mean, I am definitely a different style day trader than what most people expect, and that's why I emphasize I'm boring. And you'll see in a minute here, the last 2 days, when I wasn't boring, it cost me a lot of money. But there's another type of person that says it's just not my style, and this is the one that I want to address. And this is the person that's constantly losing money. And they lose money, and yet they go from place to place looking for someone that has their style. But maybe you should consider changing your style, because if you're losing money consistently, and you have been for months and months and months, why is it that you come to somebody who's making money and has a different style and you go, oh, well, I don't like your style, right? Makes no sense to me. Again, this is one of these things I just say, if it applies to some of you, if you're struggling, but yet you continue to find different ways to reinvent your own bad style, if that's the case, why are you doing that? Why don't you say, hey, this just isn't working, and open your mind to something else? One of the things people have a hard time opening their mind to is, well, it's actually my next topic, is what leads to the next topic, is the ability to take a trade and just kind of leave it alone until you have something to manage. I've had people be very critical of me for doing that. You have to watch that trade. You can't give back any profit at all, and yet they're losing money constantly. So just throwing that out there, that your style may be exactly your problem, and just open your mind to saying, and for some people, no. Some people, I get it. You're never going to trade like I do. That's fine. You don't have to. But you do have to learn to make money one way or another. Oh, we're doing pretty good on time, actually. We'll be done. At least we'll be done for an hour. I didn't want to go an hour, but with all the stuff I threw in there, I was afraid we were going to. My newest teaching push. The last one was you don't have the right to claim psychological issues. I did a whole event on this. I've talked about it before. I'm just going to summarize it real quick so you understand what it is. People come to me with trades, and it's the same thing. They have losing trades, and then they have winning trades that may or may not have been good trades, but they just took chicken little profits on it. And they said, Paul, I have this problem. I just can't get to a target. It's a psychological problem. And this is where I come in and say, no. When I ask them what their target was, and when I ask them what their plan was, when I ask them what the strategy was, they don't know. So if you don't have any concept of trade, if you don't know what you're doing, yes, I mean, you can call everything a psychological problem, but it's not a psychological problem. It's a concept of knowledge. Psychological problems are when you know what to do and you can't get yourself to do it, right, VRL? But it is a learning problem when you don't know what to do in the first place. And I just, for a long time, I just had up to here with people who just don't want to admit they don't know how to trade. It's always the same thing. Oh, yeah, I know what I'm doing. I'm a good trader, but I just have a psych problem taking small profits. Well, when I talk to them and understand what they're doing, they don't know what they're doing, and that's the problem. You can't ever trade properly if you don't know what you're doing, and if you keep blaming it on psych and keep saying, "Oh, I'll get over it next time," you're never going to improve. So, anyways, the new one is FOMO. We all know what FOMO is, right? I don't have to spell that. Somebody asked me one time, right? Fear of missing out. This is, I think, one of the biggest demons to me for a lot of traders. Why do I pick topics that I think are demons? Well, it's very simple. I work with a lot of people, and most of these topics don't come from seminar students because they're in the fold, they're already being trained. This more comes from people that email me or question me, or somebody wants to gather and look at some charts, and they're not seminar, and or sometimes people in the trading room, that in the trading room there's some seminar, some not seminar. And I think FOMO has become one of the biggest things. And I'm guilty of it sometimes too. Let me explain. Thursday morning on the huge gap up, right? Thursday morning, the huge gap up. I had a bearish bias, but also that type of gap up is my least favorite trading environment. As you know, I like boring stuff where you find a couple of stocks that stick out and you're focused on 3 or 4 or 5 things and you find the right thing and everything's boring and you fall asleep. What happened on Thursday to me is crazy. Now I know on one hand you could say, and I can agree, well, there's huge opportunity, because if you just would have blindly said, let's short the market, or on some other days where you have, and if there's a great opportunity, I'll take a shot at that. But it's not my favorite thing to do. So I had a bearish bias. I looked at all the charts and said, you know what? Because we're clearing an area, we may rally first before we drop. We may rally 5 minutes, we may rally 30 minutes. And basically what I said was, I'm going to walk away for a half hour. Now that's the type of style that some of you may find offensive in a trading room. They have this huge, Nvidia's doing earnings and things are gapping up and and you're going to walk away? You think that's smart, or you think that's stupid? You think that's smart, or you think that's stupid? Actually, I do like that question because there's a good answer to it. Do you think that's smart, or you think that's stupid? Exactly, Vera, exactly. It depends on, strategy / personality / whatever it is, right? Yeah. So if you're the type of person that, that tries to just get in there and take hit after hit going for the home run, get the home run, maybe a good thing to do, and you enjoy mornings like that. To me, yeah, Neil, you're about to see that in spades, because if you were in the room the last 2 days, and I'm a little embarrassed, to be honest with you. So I walked away Thursday morning. I walked away, and this is a stock of a chart that I had on my screen as a possible favorite to watch short. Here's the daily chart. I don't want. This is not about the strategy per se. I'll take any questions, but it's just about how you approach things. So I walked away. And the reason I put the chart here after 20 minutes is because I might have shorted that there. Right, Neil? I might have jumped it because this is the gap up when we're running up, and it's this vague area in here we maybe are going to short. I might have shorted that. I would have got killed. So I walked back, and I came back. I was gone an hour, right? I took off for an hour. Yeah, that's right. I said I was going to look at the screen at 10 o'clock, and I may not even type anything. I'll see you in an hour. I'll get back on the mic, right? So I come back at 10:30. Guess what? That's what's looking at me. Just an absolutely perfect area. And I may not have waited for that. And the fact that we broke just above that red bar, it was just absolutely perfect. And this is what I keep emphasizing, is when you walk away a lot of times and you come back, you just get a whole new screen to look at. And yes, you know what? I always say this when I leave. I am going to miss absolutely nothing, or I'm going to miss a ton of stuff. What difference does it make? It's not about what you miss, it's about what you make. It's about being there at the right time. So yes, if I thought there were great opportunities, the opening 30 minutes, then I would be there. But to me, the greatest opportunity was let things settle down and see what you got. So then I walked back right here. Yeah, hello? What a no-brainer. As a matter of fact, I don't think I looked at 3 charts, and I was like, I have all my thumbnails up, and I just glanced and I got on the mic and I said, oh, here we go right away. I don't have to scan, here it is. So this turned out to be a beautiful short, and I made nice money on it. Now, here's why I said Thursday no FOMO. I said, well, a little. I then, what I should have done, and what my normal style would be, would say is, okay, the rest of the day we're probably just falling. Just come back and manage this thing. It's all you need is one good trade. This trade actually would have made about triple the day's goal had I walked away. But I came back and I was sitting there and I put a stop right there and I got out by a nickel. Now, still a great trade. It made over the day's goal, blah, blah, blah. But then I sat here and took a trade that didn't work and then missed all this profit. So the swing from sitting there, not sitting there on this particular day was I gave up it was a 3-hour swing from not sitting. If I would have just left and just come in, and what I would do is I would normally never get this tight with this because I know if I want to hold it for longer. I look back and I can go two ways. This was definitely an area and should have maybe taken half there or something. But I'd lower it to here when we're down here somewhere or down here, wherever it is. So this wasn't terrible management of this, but the fact that I came back and I took a losing trade then and just, washed out the day when it should have been a triple gold day. So I got off stride, and the reason is because we are in this area in the big picture where I kind of had this I don't want to miss. And I was partly here for long-term stuff. I didn't want to miss, the big move down. So I kind of got distracted and sat here with this. So good, fantastic example of not having FOMO for me, just being able to leave the first hour and come back and see what's there. But then I stepped up in the middle of the day and came back where I normally wouldn't have and mess with things. I'm not sure there was a bad exit there, but wasn't happy with doing that. And then the next day, then Friday, I got subject to FOMO totally. So I'm just admitting that I did. Remember Friday then Thursday was the huge red bar, and Friday I had this concern, what if we just puke out another day? So I was kind of sitting here all morning, and I end up taking 3 or 4 trades. But I just want to show you 2 of the FOMO things that are just so crazy, and this one here is going to make you sick. I went long here. My stop was down here somewhere. I came in and stopped it out right there and lost a fraction of an hour, third of an hour, half an hour, whatever it was. And then look where it was. It was up 3 hours at the end of the day. And, I don't know where I would have gotten out. I'm not saying I would have got the high, but I certainly had profit in here somewhere, whatever I would have done. And that was simply from sitting there over managing. If this is the trade that you want and you think that this is going to lead to this, why are you goofing around in here? If somebody sent this to me, I would call them an idiot. And similarly, I shorted IAG right here. And same thing. I just got a little, I was upset with the day and I didn't want to take a loss on this, which is the wrong attitude to have. So I covered it here and it went a penny or two above the trail, and then it went on to be a 2-hour trade. So for that, I award myself the Idiot of the Year award for Thursday and Friday, and it all amounts to, in my mind, FOMO. That's what it was. Now, why is FOMO bad? I mean, why is it bad? Because you could argue the more you sit there, the more you see. But what's wrong with that argument? Paul, I sit there all day because there's opportunities all day long because you are missing out of stuff. Yeah, well, right. And I have 2 real answers. Yes, you may be missing out of some trades you could have done in hindsight, but you know what else you're missing out of? You're missing out of some trades that would have been bad and you would have stopped out of. So what it comes down to is I kind of plan the day structurally every day and to say, here's the key time. We closed yesterday with a rally. I'm just going to draw some funny things on the screen here. We closed yesterday with a rally. There's a big resistance area up here. We're gapping up today and we're rallying. To me, the plan is short, 10:30 to lunch. That's the plan, right? So if that's the plan to me and you do that, and here you go, you start dropping, guess what? Anything in here now is an inferior trade. It just is. Because you no longer have a structure for the day. Are we going to hold here and bounce? Are we going to keep dropping, right? So to me, there's the most opportune times. And anything beyond that is just, it's that pyramid of anything in life, right? Here's your pyramid, here's the top tier of stuff. And the more you go down, the more you're taking lower tier stuff. So it eventually has to hurt you, and I don't care what time frame you're on. And you could argue scalping, there's all this stuff, but scalping still revolves around if you got the wrong direction on the stock or the market, it's going to be much tougher to do that. You only need day trading. One, two, we only need one trade to make your day. That's all you really need. And maybe you get two, maybe you get three, maybe one's the loser, you got two winners, whatever it is, that's all you really need. All right. Any other questions? I'm going to wrap this up real quick. I have a slide or two here coming up. I want to remind you, I sent this around initially and I haven't set any follow-up to it, but that pattern day trader rule is on the chopping block to be eliminated. I sent emails about this a month ago, haven't followed up because there's no new news on it. When there's news, I will alert you. And I think it's one of the greatest things because that was one of the biggest mistakes they ever made. And I have two things I want to say. I don't want anybody getting involved in trading or day trading that's not ready, prepared, and whatever. But if you want to start day trading, I think it's the worst thing in the world to make people have a $25,000 account. And with some of the stocks today, if you can take and day trade $5,000 or $10,000, which hopefully you'll be able to do by the end of the year or the beginning of next year, there are so many stocks out there right now that are, now again, I don't like the crazies, but there are some, even like some of the airlines that, there's some $10 and $15 stocks that, boy, you have a $7,000 account and that gives you $28,000 of buying power and you get 1,000 shares of AAL or whatever it is. And that thing can move a buck or whatever, just different stocks. I don't have a screen up in front of me. But there's really an opportunity for people with not a lot of money. And that would maybe get people away from being forced to trade futures, which is hard to do. People, future day trading accounts under $8,000 have a 95, 96% failure rate. What else do you need to know, right? What else do you need to know? I know you're different. Without training, without any education, you're going to be that 1 in 20 person that makes money. Today, you'll be getting another email about day trading. I did a little series of day trading emails, just trying to explain it to people. For some reason, people who have been long-term their whole life, they just don't get the day trading thing. And I know for some of you, just, trash the email if you understand it. But I get questions back. And when I get questions from a couple people, I assume others have the question. I'm just not sending it. So there's one come out later today that's going to just kind of explain the money situation and get exactly walking through, because then somebody thought that the R unit was the cat. They didn't understand how, when I said you're risking $1,000, they thought that meant that you bought $1,000 worth of stock and they couldn't make the numbers work. So you're going to get an email on that. Again, if you're interested in day trading, read about it. The numbers are cool when you day trade. If you already know, trash it. If you don't care, trash it. Intro, December 5th will be the next intro class and the last series of live seminar, and we had a little bit of a gap between the last one and this one because of the holidays. So I'm expecting that we're going to have kind of a good attendance to these. We already have a couple new people. So you'll be getting some emails about upcoming seminars and email right about the course. And I think you already got one about the course schedule and the fact that I'm going to have, I think I said the first week of next year, I'm going to have, I don't know if it'll be like 3 or 4 hours one evening or maybe on a Saturday. I'm going to have just a pure, I'll call it a PARD maybe, but it's a pure question and answer thing. Because I'm always afraid that, there's people in class that are afraid to ask questions, which is so stupid. I keep pounding the table to ask questions because you have the home study and the live courses are for you to ask questions. But I know sometimes people, just, I don't know what it is. Don't want to look stupid, don't want to slow up the class, whatever it is. So I want to have a session where it's just, I'm going to call it bring your stupid questions. And of course, I criticize anyone calling them stupid because it said in the email, there are no stupid questions. The only thing stupid is not taking every advantage to learn everything that you can. And I just want to make one last final point and then a couple slides is that I've been doing, DTS has been doing email resends. And it typically says resend at the top. So if you saw it, just please trash it and don't get mad. And here's the reason why. I've just been blown away by this. I said before that I'm kind of shocked how many people open emails the second time instead of the first time. I did a DTS daily market letter trial a month ago or so. You probably saw the email. And the first email went out and X people signed up for it. Second email went up, Y people signed up for it. Like X, Y, Z, like numbers. And then I sent a third one out really late, and it was like already 4 or 5 days into the 3-week trial. And almost exactly the same number of people signed up on the third one as the first two combined. Now, if you think about it, it means obviously they didn't see the first two, or they would have signed, anybody want to sign up and they signed up late, they would have signed up early. So, and I guess I see it, in my email, you get tons of email, whatever it is, but so you're going to see some resigns. It's just a fact of life these days. And, if you don't like it, unsubscribe or just trash them or yell back and say, stop sending emails. I don't care, but you're going to get them. Yeah, I don't know, Eric. So just reminder, pristine day trader rule abolished, which I think is going to be a great thing for people. It was the worst decision they ever made in the history of trading. And I get that. I'm just taking it from the point of view from new traders because it forced them to lose a lot of money, and I explained that. There's a video about it on the Free Stuff page. The Free Stuff page is a video now that's dedicated at the top to new traders who are just new to the site, and then one about the pattern day trader rule possibly being abolished. You can do that. And then Friday, I'll be making a pretty big push about people coming to the intro class, which of course is a free course that precedes the seminar program courses that are going to be December 6th, 13th, and 20th. I know the 20th for gaps, you're really close to Christmas. There's just no other way to do it this year. For some reason, Thanksgiving and Christmas are just packed. Well, we're starting the first course the week after Thanksgiving. So there's only 3 weeks in between there this year. So it's just the way it is. So you'll be seeing some emails about that as well. Any questions or comments? It's actually a minute till 10. We'll be out of here by 10. And most importantly, no, it's not. No, I said no news, no new update yet, Tony. No new update yet. But I just wanted to remind people because I mentioned it a month ago when the news came out and I haven't updated. So I just wanted to remind people that it looks good. But what I understand from researching it is this is just procedural from here. The body, I forget who's who between the SEC and the FINRA and whatever it is, but the body that matters said we're killing this. And it has to be, it's kind of like, I guess, the House and Senate passing something, it goes to the president who already said he liked it type of thing. So my understanding is it's kind of a done deal. It's just not official yet until it's all signed off. And there's a couple question marks like that. My understanding is that they're not going to impose any minimum requirement whatsoever. It'll just be up to brokers. And the brokers will probably put a $5,000 minimum count or something like that so they don't have to mess around with the dum-dums. But, okay? Any other questions on anything? Most importantly, coffee mug number 3. That was the important thing. Each broker can choose whether to. Any broker, VRL, can always be more restrictive, right? Nobody can force a broker to do something they don't want to do. They just can't go beyond the law. So if it is abolished, any one broker could still say we're going to follow it. Or they could put a $20,000 or a $10,000 or $5,000. But I cannot believe there'd be any broker that would not want to take advantage of this because there's just tons of more clients for them, right? And most of them are going to be dumb idiot clients that are just going to trade like crazy, So I can't believe the only thing they're going to want to do is put some kind of minimum where they're not, nobody wants to open an account for $1,000 and then close it out in 3 days, So they're going to have some minimum in there, but it'll probably be a reasonable number, I would guess, right? Give value to get market research on mugs. And they're not coming, by the way. I was just curious. All right. Have a great Saturday, everybody. And next up, we'll see you in the trading room on Monday. Intro classes. Yeah, the next seminar course is 2 weeks from today. Next week is Thanksgiving weekend, and then we start up with the live seminar courses. So the next intro course is 2 weeks from yesterday. All right? See you, everybody.